Hey traders, welcome back to another Sunday video. This time I'm actually doing it on a Friday because I'm going to be out of town this weekend. But in this video, we're going to be taking a look at setups for the week ahead. I'm going to be taking a look at things like gold, the stock indices. We'll take a look at some currencies. And more importantly, what's coming ahead that we can pay attention to. This week is action-packed to say the very least. So join me as we set up both price action and fundamental setups for the week ahead. Guys, welcome back to the channel. Just as we get started, I want to ask a quick favor. If you could hit the thumbs up button on this video, that really does help just to support the content here on the YouTube algorithm. Let's go ahead and jump into the first chart of the day. We're going to take a quick look at the S&P 500 and just talk a little bit about this daily chart that we're looking at. At least at the time of recording, there is just about an hour or so of trading left at the time of recording this. As I mentioned, it is Friday, but what we can see here is that there's been a little bit of a rejection candle, but I wouldn't read too far into this recent price action simply because this past week here has been very, very boring in terms of economic data, earnings. There's just not been a lot. But that is not the case as we go into this week ahead, which is CPI week and PPI week. And well, there's just a bunch of other stuff that's going to be going on in between. It's going to be a volatile week. And so as we look at this kind of rejection candle, yes, that's perhaps a little bit of a tired rally. We've seen at this point 1, 2, 3, 4, 5, 6. This will be the 7th green day in a row. And usually, you know, a period of 7 days down or 7 days up. I remember, you know, years ago, my dad and I would always talk about, it seemed like this very frequent pattern emerged where in a big sell or a big rip, you'd usually see these sequences of 7 days. And so it's very interesting to see that we're having a 7 days consecutive move higher, but a big rejection on this recent day. That being said, again, next week we have CPI and PPI. And so as we prepare for that, I'm just going to pull up Forex Factory just so we can see what's on the radar here. So if I go next week and we just take a quick look here, again, on Tuesday, we get the producer price index, and we also have Jerome Powell speaking. Those are going to be big events. And then on Wednesday, you have the consumer price index and retail sales numbers. It's a huge week. I mean, those are some really key figures. And I want to set the stage just to how important this CPI event is going to be. But I'll talk more about that in just a moment. Let's finish up our price action analysis of the S&P 500. We broke out here very nicely. This was very, very bullish. And you can see these green candles. While I'm saying that I think that perhaps there's a bit of a pullback coming, this is still in the context of a very strong upward trend. And, you know, I wouldn't discredit the price action that we've seen so far. I think it's possible that during CPI week, if we do get, and this is at a big if you get a hotter than expected inflation read, we very well could see the S&P 500 make a quick pullback to somewhere like this 5120 area, where we found, again, a lot of resistance previously and then broke out decisively in the last 7 days. So that's the question again. As we come into the CPI print, if we get a hotter than expected print, the inflation may scare people, and of course the market would react, probably by selling off if you get a hotter or higher than anticipated inflation print going forward. In fact, I want to show you some data about inflation before we get into other, you know, markets and other charts and stuff like that. I just want to talk a little bit about how important this particular CPI print is. We've seen a streak here. If we take out, you know, let's just narrow our focus here a little bit. The blue here represents the US. And what you can see about the US's CPI inflation read has been, it's actually been trickling higher, which is problematic to the story of, you know, the Fed trying to get inflation under control. And everybody wants rate cuts because, again, it relieves, you know, borrowing costs for consumers and for businesses alike. But we can't get rate cuts if inflation is still problematic. If inflation does not want to come down to the 2% target, what's going to probably end up happening is the Fed is going to have to hold interest rates higher for longer, which hurts businesses and consumers and people who want to buy a house, right? That's the big picture. So the next question is, when you have, okay, inflation's sticky, are we then going to get more stickiness, which would be very, very scary for the market because, again, we'll talk more context about the other economic data in a moment. again, the inflation story would not be pretty. What the market is very hopeful for is actually a cool down in inflation, in which case you would very likely see the market celebrate that. But let me add why this particular inflation read is so important by pulling up the data scanner specifically for stock indices for just a moment. In fact, actually, let's keep it here. So check this out. GDP numbers, they came in recently. The advanced GDP number came in lighter than forecasts. The PMI number came in lighter than forecast. Both services and manufacturing, by the way, both came in lighter than expected. Now, retail sales we get next week. Let's take a quick look at CPI. CPI recently, before this, came in hot, right? Both on the core and on the headline level. Now, jobs data also came in light, and unemployment also came in not as good, right? Ticked up in unemployment. So all this to say, when we talk about this upcoming inflation print, just how important is it that inflation comes down alongside the economic data? It's crucial, because if what you start to see is, in fact, inflation actually staying hot, meanwhile, the economy is starting to slow down, then you have what is called stagflation. And this is a very scary environment, because now the Fed has to deal with a struggling economy and sticky inflation, and we really don't want that. So I wanted to get that out of the way. The worst case scenario for stock market stuff going on into next week is hot inflation. Now, let's take a quick note to talk a little bit about gold, because I'm personally long GLD right now. So here is my gold position as we speak. I'm still in a long position here. This one's made a nice little move, and I want to talk about why I'm actually very okay with being long, with my stop loss trailed into profit going into the CPI week. Well, remember how we just talked about how economic data was cooling, and that was concerning for stocks, especially if inflation comes out hot? Well, if you get inflation reads coming in hot next week, right? If this number comes in high, and the way the Edgefinder scores cooling economic data is a deteriorating economy is actually positive for gold in our scoring system used by the Edgefinder. That's why the Edgefinder is currently getting a bullish read, is because jobs are cooling, economic data prints are cooling. So people may want to diversify or hedge their positions by going into gold, which typically actually does well in a worsening economic environment with combinations of higher than expected inflation. So if we get a hot CPI read and we dip next week, I will be buying that dip and probably adding to my position on gold. So I just wanted to add context. When we use the Edgefinder in my videos, this is how I'm using it. The algorithm is looking through all the economic data in the data scanners section, and then we go to top setups. That's how it's being used here. By the way, down below in the description, if you'd like to try out the software for 30 days, there is a link to sign up or apply for that trial. If you're interested in getting a copy of the tool, if you want to check out and see if this would be a good fit for you, it helps me tremendously as a fundamental trader to have all the economic data automatically imported, showcased to me, but also on top of that, automatically generate bullish or bearish signals for the charts that I want to see, right? I'm trading everything from currency pairs to commodities, indices, stocks, etc. So having all of this automated in front of me is very, very nice. Let's keep pushing on. I want to talk a little bit about the NASDAQ just for a moment. Actually, you know what? Let me finish my thoughts on gold. So I'm long on gold here. Support did end up holding, which is very nice. We broke out of this key level here on today's price action as we speak. And so I've gone ahead and trailed my stop loss into profit just slightly off of the 4-hour chart. So we put in this higher low, and I'm actually looking to trail stops further. I'll probably do that with inside of the Discord VIP group, which, as I mentioned earlier, you can find a lot of stuff in the description. The VIP Discord is linked down there as well. Okay, so I'm looking to see when we go into this big CPI week that the producer price index or consumer price index actually do still show stubborn inflation. If that is the case, I will hold tight to my gold position, as it is sort of offering a bit of a hedge. Now, I want to add another thing, another position that I'm in. I'm actually short Bitcoin, and this is a rare thing for me to trade, but I actually took a short position on the ETF, an ETF that tracks the price of Bitcoin, which is IBIT. It is a small position, but I'm up a modest $190. This position position hasn't moved too much from where I entered into it, and it's a bit more of a swing trade, but I'm looking for Bitcoin to roll over a little bit more. If we do see sticky inflation and the economy cooling, that's an environment where I'm actually kind of bearish on Bitcoin, because in that case, the consumer is going to be tapped out, and the consumer being tapped out means they might not have extra money to go invest in, cryptocurrencies and things like that. And that's also, in line with yields backing up today, up 1% on this Friday. And, as we go into this week, the big question is whether or not inflation is going to stay sticky and problematic, in which case perhaps yields are bottoming out and we go higher. We'll have to see. That brings me to perhaps the next chart we could talk about is the dollar index. Dollar index has been kind of all over the place and a bit of a confusing one. The recent round of economic data puts negative pressure, you can see, on the dollar index. Makes sense because, again, cooling economic data, not great for the dollar. However, the other currencies that the dollar index is weighted against are also seeing some struggle, right? The euro, the pound, etc. If we take a look at the euro USD, it's modestly trying to break out here, but hasn't seen any massive conviction to the upside. And that's because, in my opinion, the dollar looks, kind of weak recently, but so do the other currencies, because you may be wondering why that is. It's because other central banks are still looking to cut interest rates. Yesterday, we heard from the Bank of England, and they seem to be still poised to cut rates, in fact, even sooner than the U.S. is. So if that is the case, if we see, the Bank of England cutting interest rates, and so is the ECB, and so are other places, remember that interest rate cuts means that, that's usually, just long story short, it's more bearish for the currency. So if other central banks are cutting their interest rates sooner than the U.S., by proxy, perhaps the dollar doesn't look as weak as that data we just talked about may make it sound like, right? Remember, a strong economy is good for the underlying currency. Higher interest rates are good for the underlying currency. And the inverse is true. If you get cooling economic data, it's poor for the currency, and lowering interest rates, usually cooler or worse for the currency as well. So as we kind of draw a comparison between the dollar and its peers, the dollar, in my opinion, still could be bullish. I mean, if you get a hotter than expected print next week, it is, the Fed's very, very stubborn on their willingness to get inflation down. In fact, Jerome Powell even seems like he wants to cut interest rates, but he does not want to cut interest rates unless we see, progress on the inflation side. And so I think next week is so pivotal because we've heard from the Fed that is what they're looking for. They're looking for progress. And so we will see with that CPI print if progress has been made in the inflation story, or if we are going to truly see the economy slow down while stubborn inflation still persists. And that is, again, that's kind of the worst case scenario for stocks. If that does happen, we can finally make our way over to the NASDAQ. You probably see some really not pretty stuff for the NASDAQ. If you get, a really hot print next week, the NASDAQ probably rolls over. You probably see, if you get PPI, let's just paint a storm here, paint a picture of a perfect storm. PPI, CPI, and perhaps PCE. If your big three inflation reads are hot, right? Let's just put a little flame here. Like if they're hot, basically the NASDAQ and the S&P 500 could take out those April lows. It's very, very possible. That's, of course, assuming that they come in hot. I think the expectations are not for them to come in so hot. And that's where kind of the hope is. We've seen jobs data come in light. As I mentioned earlier, let me show you another fancy, pretty chart that we've worked on the Edge Finder. By the way, I don't know if you guys are, if you're an Edge Finder super fan, we changed the color on some of these charts here just to be a little bit brighter. Someone mentioned on the live stream that the numbers were a bit hard to read on the eyes, so we've changed the color to be a little bit more stark of a contrast to the darker background. For my Edge Finder using friends, I hope that that's helpful to you. And as always, if you do have good feedback, if you're an Edge Finder user, please just leave us feedback by going to the top setups page. Leave us feedback right here. That is a great way just to have your voice heard in what we're doing to make the tool better for our customers, for our users who are trading with the help of the Edge Finder. Okay, so we had our first print that came in light. I added this little chart here. This is actual minus the forecasted NFP or employment change month to month. And in the latest jobs print, we got one that came in at, to the biggest magnitude of a miss that we've had in a long time. Okay. So we had our first jobs miss, and this jobs miss, again, the market actually cheered because, hey, that's going to help the inflation thing. If less people are getting hired, less people are getting, jobs, less people are going to be out there spending money and raising prices. That's the theory, at least. But again, this is a theory. This is what markets are hopeful for with the real test, which is CPI this coming week. So very, very interesting to see that. And again, just a quick look at the top setups page. I won't be able to do COT data as I am recording this before the full week, but let me just remind you, if you guys would like to try out the Edge Finder yourself for 30 days, use the link down below in the description. And if you'd like to just go ahead and get a discounted copy of the tool, you can click the link down below in the description, purchase it on our website using the code YTVIP. That will give you a nice little discount there for you. And you can be using the tool yourself. So with that said, let's go back to some more charts here for a moment. So again, you've got gold making a move higher. It's the only thing really moving on this Friday when I'm recording this video. That and Bitcoin is making a little bit of a tumble. On the currency front, here's the euro. Looks like it's trying to break out. The pound. The only real chart that seems to be, really strongly moving for currencies right now is the dollar yen. The dollar yen seems to have found support and is heading back up. I guess now the question is, it's dependent on whether or not it breaks through these highs or if it breaks through these lows. Really, I don't have a strong preference on this one, but I get a lot of questions. Where's the dollar yen going? I think if you, take a look at the weekly chart for a second, this is a really strong upward trend. So I don't necessarily know if this is the, top of this move or anything. In fact, the path of least resistance over a long-term chart here seems to be to the upside, so long as the carry trade remains intact. But there's some challenges to that, which is, interest rates being cut globally could make the yen start to look a little bit more attractive. So if you're watching the yen, some intervention is on your side if you're a bull on the yen. And if you're a bull on the yen, meaning bearish dollar yen, what I'd say is watch for the breakout of this level. That could signal perhaps that a short-term or perhaps even longer-term top is in around that 160 point where intervention seems to have taken place on the dollar yen for the traders who are watching it. Finally, I wanted to just take a moment to take a look at some of my current options positions as well as just my overall positioning. Again, I have that long position on gold right now. I am also long the technology sector via XLK, which is going pretty well, and my S&P 500 swing trade that is going very nicely as well. We got some good trades running right now, and win streak seems to be pressing on. Let's see how long it can go. Again, the Bitcoin short is also one. Solar panel, a solar panel ETF called TAN, and bonds is my only current negative position that I am working with as I went long bonds a little bit early, but I've sold calls, so I'm collecting a little bit of positive premium in the meantime. If you'd like to learn my options trading strategy, there's a video on YouTube. Just search up on the search bar, just search up Trader Nick option strategy or Trader Nick wheel strategy, and you can find that video. And then finally, if you're looking for a new brokerage, let me just go ahead and give a quick plug to some of the great brokers that are out there. Linked down below in the description. You can use this one. This is WeBull, which is preferable for US traders. It's what I use to trade ETFs, things like GLD for gold, or I can trade options, or I can trade SPY, whatever I want to trade. So if you're not already using WeBull and you would like to, click the link down below in the description. You get some free shares when you sign up. Also, if you're outside of the US, there's some excellent CFD brokers that have great sign-up perks available to my audience if you use my referral code or my referral link down below in the description. You don't have to do that. You don't have to use my link, but if you choose to, you'll be supporting my channel. You'll get something awesome out of it for free, and I appreciate your support. Thanks for watching. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel, and we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern. broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.